it was like a school credit union or something like that, but it made it, the description when the transaction came through made it look like maybe it was their student loan payment.
Oh, interesting.
But it wasn't their
Yeah.
student loan payment. It was actually the loan payment to a credit union in which
Uh-huh.
they purchased a new business vehicle.
Uh,
That asset hadn't been set up, the new loan hadn't been set up. So you miss out on, you don't want
yeah.
to miss out on a $30,000 expense,
Yeah.
a new
Yeah.
asset that you need.
Yeah. All right. Hello, Dan.
How are you?
I'm good. How are you?
Good, thanks.
It's nice to meet you.
Nice to meet you as well.
I was doing some sleuthing on your website, and I see that you're from Salem,
Yep.
Ohio.
Yep.
My family is from Salem, Oregon.
Okay.
And it was weird. It was weird to like read about all this Salem stuff. And I'm like, I should know this. I keep seeing Salem, but I don't know this place. So it was kind of a weird out of body experience. But
Yeah,
thanks.
what's worse is when you like have something shipped and they type in Salem, Oregon, and
Oh, yes.
yeah,
Oh,
and it
yes.
never arrives. There's also Salem, Massachusetts. So
Yes. Yes.
yeah, so
Yep. Cool. So thanks so much for meeting us and talking
good.
to us about how to build a better bookkeeper. Tell us a little bit about you. I mean, I did some sleuthing, but
Sure,
our
sure.
watchers, our viewers want to hear about you and your experience. And then let me have it. Like, what are your top couple of things of what bookkeepers need to know? How can they be better? What kind of, I love to hear the horror stories. What have you, what have you seen? Just like,
Yeah.
let us have it.
Yeah, so I've been in practice 27 years. So started as just a young pup.
Yeah, first grade
And
apparently, since
yeah, exactly. So a family member of mine is a CPA, and so she had started a practice. I started working with her. And so of course she was just, to keep the lights on. She would started, primarily in tax, but then started to have a, pretty substantial practice of small businesses. So she started doing bookkeeping for people and a lot of small business, advising. So
uh-huh.
flash forward 27 years later, we still do bookkeeping in-house for clients, but we
Mhm.
also have a lot of small business that some of them attempt to do it themselves, some do it better than others. And,
Yeah.
so we've definitely seen all of the bad tricks
Uh,
and some bookkeepers will ask you every question under the sun.
mhm,
Others don't ask you anything at all and just
mhm.
plug away and
Yeah,
post it somewhere. And others, they might leave you a note in the memo that might
yeah,
give you some indication or use the, typical ask my accountant. So it's
right.
all
Yeah,
that uncategorized expense, uncategorized asset, all those, fun things. So
yeah. So let me just interrupt you for a second because I was just having a conversation with somebody on our council earlier today about communication.
yeah.
So you just listed off a bunch of things. Sometimes you never hear from the bookkeeper. Sometimes they pester you with questions, and then, there's a spectrum. What do you actually prefer?
Hmm. So yeah, I mean, I think that um, you know, if it's maybe more on a monthly basis, they're
Hmm.
compiling information and providing it to you for you to look at and to review. That's more preferred than, maybe getting it at the end of the year because it might be something we want to correct moving forward.
Hmm.
For instance, if someone doesn't know how to properly pay their sales tax in QuickBooks, we'd rather them ask that question in January than
Yeah.
wait until, we need to go back and fix reconciled transactions that, really
Hmm.
need to be reported differently in QuickBooks to properly show what the sales tax balance is. So
Yeah.
If we could get them in more of like a monthly standpoint, but we do realize that there are certain times that you need to know how to handle a transaction before you can do the next part. So
Yeah. Yeah.
particularly when it comes to like customer refunds or credits that you have to do for their customer.
Mm-hmm.
Um, so yeah, it really depends on the situation.
Yeah. 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 Oh, good. I'm so glad this came up because, like I said, I was just talking to somebody earlier today. So tell me about some of the ways that you think bookkeepers could be better. Like what's some of the horrible things that you've seen, or even, what we haven't talked about on this show is like some really amazing things that you've seen that you wish everybody would do.
Sure. So I always start with a balance sheet when I'm reviewing. The profit and loss is sort of the last piece and I think a lot of bookkeepers seem to focus more on that profit and loss side of things, but they're not necessarily focusing on the balance sheet.
Mm-hmm.
I start at the top of the balance sheet and work my way down. Um, Horror stories would be negative balance in a checking account when you look at the reconciliation. Bank balance is high, negative balance in the checking account. Then you look at the previous reconciliation and you see $200,000 of uncleared transactions
Oh.
because they're duplicates or
Mm-hmm.
posted to the wrong account, you name it. And so, you know,
Mm-hmm.
so often think, bookkeepers, they go and they reconcile everything, but just as important of checking the things off when they're doing the reconciliation as looking at the things that they haven't checked off. So that's
Yeah.
sort of a big frustration. And a lot of time, I mean, obviously you're seeing this in just sort of your armchair kind of bookkeepers that are, doing this not as their full-time job or have had
Mm-hmm.
zero training. But, first off, I can't rely on the transactions that are in the checking account, then I can't rely on the books at all. So,
Yeah.
first
Yeah.
is looking at uncleared transactions, particularly deposits. You know, is this a missed deposit? Did the bank not, you know, properly post that deposit? Is it just a duplicate? Various things there. And because of bank feeds, especially with QuickBooks Online, transactions are in there. They don't match up properly when they get downloaded through the bank feed, and so then they get duplicated. So all that. But yeah, can't tell you how many times I've start and look at the balance sheet, negative $200,000 in checking account balance, and they've got $60,000 in the bank and
Wow.
all of these unclear transactions. So I always
Yeah.
start with the balance sheet and work my way down.
Mm-hmm.
Um, Looking at assets, see loan payments for the vehicle. So maybe they specifically set that new vehicle up as a separate line item as an
Mm-hmm.
asset, but then the loan payments get applied to that asset and not the actual, Ford Motor Credit liability.
Mm-hmm.
Um, then move my way down to, credit cards or another area where if we've got uncleared transactions in the checking account, a lot of times they're credit card payments that get
Oh.
duplicated. A lot of times because the credit card posts the transaction on a Friday, but the bank doesn't post it till a Tuesday because of the time
Uh-huh.
difference. And so
Uh-huh.
a lot of times they end up with duplicate credit card payments. And so cash balance has two credit card payments, credit card has two credit card payments, or the payment gets posted to like uncategorized
Mm-hmm.
assets. And so now we can't even rely on the credit card balance. So, um, definitely, again, working my way through those liabilities to make sure
Yeah.
it's
Yeah.
correct.
So, you've mentioned QBO a lot.
Yes.
So you're obviously a QBO house and big user of that. Not all accountants are. Some people are, kicking and screaming against QuickBooks Online. But one thing about QBO, they have this the credit card payment option
Mhm.
versus just a transfer. And
Right.
I've heard some people say, don't ever, ever, ever use the transfer. Always use the credit card payment. Would you agree with that?
Yeah,
Or
I
do you think it makes
actually
a difference?
try not to do, because transfers are limited from one account to certain other types of accounts. So
Uh-huh.
if someone does a transfer and it's a completely incorrect
Mm-hmm.
transfer, unless you want to delete and re-enter that transaction,
Mm-hmm.
you're gonna have to do a journal entry to move it. So
Yep. That was exactly what I heard before. Yeah.
yeah,
Yeah.
so we try not to do transfers. I mean, if it really is and you know it is, by means use it.
Yeah.
But yeah, fixing the transfers in general.
Interesting.
Let's say it's you have a credit card for an Amazon credit card. So you have payments to the Amazon credit card, but you also make regular purchases for Amazon.
Oh,
So if you
yeah.
do it as a transfer to the Amazon credit card, but it's really an order for office supplies,
Uh-huh.
you can't
You can't undo it easily.
undo the transfer. Yeah.
Yeah, yeah, yeah. Oh, interesting.
So
Well,
then you end up deleting the
that's a really good
transaction,
insight.
re-entering it, re-reconciling.
Yeah, yeah, yeah. Well, that's really good insight. Excellent. All right. Ooh, this has been juicy. It's only been 10 minutes.
I know.
What else have you got?
Um, so I look at shareholder distributions, of course, just to make sure they make sense.
Mm-hmm.
Whether it is, look, of course, at any deposits that get coded to shareholder distributions, are they actually a contribution from the shareholder, or was it proceeds from a loan? Is there a new loan we don't have set up? Um, and then looking at those distributions to make sure that, you know, a lot of you post a lot of things that are non-business related for the owners that kind of run everything through their business. And so you got to be careful there
Yeah.
because they might not be like, well, I don't really know what this transaction is. It can't be business related, so I'm just going to throw it to shareholder distributions. But then
Mm-hmm.
you go back and you look a little closer, and it's actually a new loan for a new vehicle that they
Mm.
purchased. So
Yeah.
I forget the exact example, but it was like something. It was like a school credit union or something like that. But it made it the description when the transaction came through made it look like maybe it was their student loan payment.
Oh, interesting.
But it wasn't their
Yeah.
student loan payment. It was actually the loan payment to a credit union in which
Uh-huh.
they purchased a new business vehicle.
Uh-huh.
That asset hadn't been set up. The new loan hadn't been set up. So you miss out on, you don't want
Yeah.
to miss out on a $30,000 expense,
Yeah.
new asset
Yeah.
that you need
Yeah.
to
I
address.
yeah, I have heard from others to look out for the big numbers. But this is the first time I've heard it as um coded as an owner contribution when it actually should have been a loan.
Right.
That's a
Right.
new one for me. So
Yeah.
so wow. Wow, interesting. All
Yeah, for
right.
instance, yeah, so like if it comes through, like some banks put like book transfer, and so it's like a teller transaction.
Uh-huh.
The banker is just doing a manual ticket to show the proceeds from the loan. It may make you think that the owner's transferring this
Mm-hmm.
from their personal account or an account at a different bank into the company to, as a capital contribution, but it really turns out that they got a new loan
Yeah.
to purchase a new piece of equipment, which they did properly report the purchase of the equipment, but the loan didn't get set up.
Yeah. Yeah.
So,
Interesting. Huh. Yeah. Well, and that's a good thing that for any bookkeeper when there is a new asset to say, how did you pay for this?
right,
Like that's a
right,
triggered question.
yeah.
So, did you get a loan? Did this come out of your pocket? Where did the money come from?
I mean,
Interesting.
because at the end of the day, I if if we see this a lot, like auto expense. So they'll put a new loan payment to a new vehicle in auto expense. Well, I can understand why you thought that might be where it
Right,
should
yeah.
go. So I'm not going to rely on the profit and loss at all until I know those balances are correct, because
Yeah.
there's really no sense in me even looking at a profit and loss. If baked inside auto expense is $15,000 of loan payments for two new vehicles.
Yeah, yeah.
Um, baked inside small equipment is actually loan payments for a new piece of, new piece of equipment.
Mm-hmm.
So I like to start, my role is when my staff come and ask me questions, is we want to start with what we know, and
Uh-huh.
what we can reconcile is where we start, because we
Yeah.
have a third-party source that we can use to match up to our books. So we're going to
Yeah.
start there. It's
Yeah.
the easiest thing for us to do. Payroll liabilities are also a big challenge. Again, with bank feeds, most, like large payroll processors, we process payroll for clients. We're impounding most of the taxes, so the taxes are getting paid really with every payroll. But some, companies, if they're using QuickBooks, well, even QuickBooks to some degree, I think is switching over to impounding the taxes. So,
Yes,
but
yes, they just announced that. Yeah.
yeah, so you've got this liability, and that's confusing as heck to people to even know what a payroll liability is, and
Mm-hmm.
understand that. So maybe the 941 payment gets posted to like payroll taxes and not payroll
Mm-hmm.
liabilities. And so again, you've got um, a big disconnect there.
Mm-hmm. Excellent. All right. Well, you have given me so much juicy stuff here. So thank
And then
you.
we can't forget about the looking at the income accounts. So when I
Wait, say
make
again? We
the
can't forget
income
what?
the income
Income accounts.
accounts,
Yeah, yeah,
yeah.
yeah.
So after I've tightened up my balance sheet and I'm feeling pretty confident, then I go over to the income side. The first thing I do um, is I'll run look at the income accounts and run a report and sort by amount, greatest
Mm,
to smallest. And I immediately look for any deposit, anything that's reported as income that looks out of the ordinary. Um, if most of their deposits are small, 500, $1,000, but then I see a $20,000
mm-hmm.
deposit, chances are it's not income, but maybe they sold a piece of equipment, which would still be income, but we need to treat that differently,
Mm-hmm.
and figure out the basis of that asset. Or they put their own money into the company. Again, they didn't code it as an owner's contribution, or net it out against shareholder distributions, and so that
Mm-hmm.
money they're putting in shows up as income into the company, or they get proceeds from a loan and they don't set up the loan and they just record it as income. So I always look at income and run, I look for, especially if they're doing accounts receivable, I
Mm-hmm.
also look to see, okay, I can probably exclude, not always, but I can probably exclude invoices. Um, so then I can just look at all the other transactions that might just be like a regular deposit that
Mm-hmm.
isn't, posted as payment from an invoice. But that being said, I've had clients create invoices, create items to make the invoice, and that item was actually the proceeds from a loan.
Oh gosh.
So,
Okay.
and they tagged it to an income account. So it showed up as an
Uh-huh.
invoice, their parents loaned them $50,000. So they created an invoice and then created an item called loan,
Uh,
whatever you want to call it.
uh-huh.
And when they set that item up, they said, oh, it's an income account posted to sales. So
Oh my gosh.
yeah,
Okay.
that's another one.
Oh my gosh. I love talking to you guys.
Yeah, yeah,
All sorts of good stories.
yep.
Oh, all right. Keep going.
So yeah, on the other side too, I've seen invoices that were created, the item was created, but it was kind of posted to an expense account. So, you know,
Okay.
maybe in theory you could net those two to each other, but
Uh,
like for instance, maybe they're getting reimbursed. So they have supplies, but they get reimbursed for those supplies.
mm-hmm.
So they post the income to
Yep.
the supply expense account. They
Yep.
offset each other.
Yep.
Um, and I actually did have an issue once. IRS did do a match of all the 1099s,
Uh-huh.
and there's a significant difference between the 1099s and what they report as gross receipts. That's because
Okay.
one of their expense accounts also had offsetting income. So they would post, they were kind of billing out for supplies
Uh-huh.
to their customer, but it was offsetting their cost of goods sold for those supplies.
Mm-hmm.
So their gross didn't show that income, and it was a
Yeah.
significant difference.
Yeah. Yeah.
And we were easily able to explain it to IRS, but
Uh-huh.
and say, hey, they reported all their income at just this $300,000 chunk of income offset the expense,
Mm-hmm.
which is in this account, and this is how we get back to that number.
Yeah. 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 Wow.
But you
Interesting.
have to hope. I mean, we were successful in explaining that one, but you have to hope
Yeah.
the person on the other end gets
Yeah.
it, and
Yeah.
you when you explain that.
Yeah. What percentage of audits, I mean, like in general in the industry, what is the percentage of audits? Like, do you typically go through an audit every year, or is
I mean,
this
it's
a
still less than 1%, and I mean,
okay?
it's kind of depending on your income level. So where you
Okay.
fall as far as income,
Okay.
higher percentage if your income's over a certain threshold, but it's still teetering around 1%. Um,
Yeah.
so it isn't frequent. I mean, in my
Yeah.
career, I've had three
Okay.
major full
Yeah.
blown. We're gonna pull open the books and take a deep
Yeah.
dive.
Yeah.
I mean,
Interesting.
you get the CP 2000, which is the mismatch. Those happen all the time.
Oh, okay.
Um, but the ones where it says, "Hey, we want to look at your entire books and records,"
Mm-hmm.
those are rare.
Hmm.
But when
Interesting.
they happen, they're painful.
Yeah. 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 I can imagine. I can imagine. It hasn't happened to me yet. Knock on wherever my wood is.
Right. Yeah. Same here.
But I'm also very meticulous. Another thing that that folks have told me is that that when the IRS comes, if they see that you're meticulous, they dig less deep. You
Right.
know, they'll
Right.
dig deeper if you're more scattered. So
Yeah. Yeah.
excellent. Anything else burning on your brain that you wanted to share?
Oh,
You've given us so many gems here.
yeah. Yeah. The Ask My Accountant, without backing it up with an email with
Mm.
information or,
Yeah.
um, you know, just kind of acting like it doesn't exist. You put it there and, um,
Yeah.
you sold a property, we're going to want to see closing documents. Like, give us the information. Tell us about this transaction. If you can't figure out how to categorize it, chances are I'm not going to know either without a lot
All
more
right.
information. Um, putting something in the memo is a great help, but you know, there again, we're going to want to see the transaction and understand some support behind it.
Mhm. Excellent. Excellent. Well, thank you so much for your time.
Yeah, no problem.
Have you joined our council, or is this
Yes,
just a
I just
one-time
I haven't been
conversation?
involved yet, just because
Oh, okay.
I've
Okay.
been you know,
All right.
happened right at
Fabulous.
the end of the year. So
Yes. Yeah. Well, we recognize that it is about to get crazy busy.
yeah,
And really what we're saying is use this time so that when the really awful things come up, or like, because now's the time when you're gonna see the things that you're like, oh, I got to be sure and tell them this, like that's when
right.
that's when to like message us, or post something or record a voice note or like whatever it is. So
Yeah,
because right now you're talking and you're like, well, yeah, this happened to me one year at one time, whatever. But as things happen, we are on a mission to create a better bookkeeper. So we
right.
want to make sure that all of these things that that you're talking about happen less and less and less, and eventually go away, because we're gonna create the gold standard bookkeeper that knows exactly what to do. So
Yeah, and I
anyway,
think the
cool.
thing too is just, the bank feeds are very helpful, but you can't rely on them. You have to have fundamental knowledge.
Mm-hmm.
I wish we could turn it off for our clients, but still have access to it for us.
Oh,
We can
really?
use it and understand it,
Yeah.
but the client, I'm like, yeah, I've told clients, I'm like, when you grow up, we'll show you how these bank feeds work. But first, we need you to understand how to record a deposit. If they're doing the bulk of their bookkeeping,
Uh-huh.
and I'm like, there is this feature, but to
Interesting.
me, it doesn't exist yet because you need to learn how to enter these transactions so that it makes sense.
Huh.
Sending them right away to bank feeds, if they're doing, if they're doing, especially if you have accounts receivable, I mean,
Uh-huh.
they've got to learn to get the transactions there properly before they can jump into looking at anything with the bank feeds.
Huh. That's interesting. You and I have different philosophies about that, but
All right.
I think, yeah, yeah, yeah. But I think that's a conversation for another time. So,
Sure.
so anyway, well, again, well, I look forward to working with you more. This has been
Yep.
awesome, wonderful. I appreciate it. And I hope you survive the next couple of months. And I look forward to talking to you more on the
Great.
council. This is going to be
Great.
fun.
All
Good
right.
stuff.
Yep.
All right.
Thank
It was
you.
nice meeting you.
Yep.
Thank you so much.
Take care.